Okay, hello everybody. So today we're going to do a quick review of the Quantum Emperor EA on the MT5 marketplace. So if you've been around the world of Forex and expert advisors for any given of time, you may have seen this one before. So it's been either in the top spot or fairly high up on the MT5 marketplace for a while. And yeah, it's kind of either famous or infamous depending on your perspective. And although it might not be for everybody, I think it's still worth doing a review of it, as well as maybe speaking to a bit of at least what I've seen over the past year and a bit kind of since I've noticed it. And would love to be able to just do a quick review and go over the strategy. So maybe just to go through the sales page here as a first step, we can see that it's trading pound dollar on the H1 time frame, and it appears to be relatively spread sensitive. Okay, it's saying that it uses a trailing stop loss. I'm trying to see if it gives any indication as to what strategy it uses to open positions. Here it's saying that it's continuously splitting a single trade into 6 smaller trades. This likely just means it's using a martingale system, which I know it is. But I'm curious as to, like, even if you devise a martingale strategy, which maybe just tell everybody on the stream what that is. It's effectively a system in which you double down on losses. So you can Google it. It's originally from roulette, derived in, I think, Renaissance era France. But effectively, let's say you lose $1. The next time you go in, you'll bet $2. So in theory, your most recent win will cover all your previous losses. And in Forex, this typically works with a grid. So effectively, let's say you initially enter with a buy, but instead of the price going up, it actually goes down. So you keep losing money. At predefined grid levels, you will enter again with another buy. So let's say it goes down 10 pips, you buy again. Then it goes down another 10 pips, you buy again. Another 10 pips, buy again, and so on and so forth. But effectively, each time it goes down and it hits another level, you will be either doubling or applying a certain multiple to your trade size. So in theory, your last trade will cover all the previous losers. However, this can very quickly also blow accounts, so you do have to be rather careful. But the reason what I'm looking for right now is effectively what is the logic behind it. Unless I'm missing something here, it doesn't really speak to how it's actually deciding to enter trades in the first place. So maybe when we run the back test, we'll get a bit more of an idea regarding what it's actually doing. So just to quickly go through the signal page, we can see a beautiful equity curve, fairly indicative of a martingale system. And here the balance in the equity is also hugging itself reasonably well, but that could also be because this signal is fairly new. And here we can see, looking at the actual trades it's taking, let me just flip through to look for some signs of martingale. Here we go. So look at this lot size relative to the other ones, right? If something is all of a sudden going from trading $9 to 171, that's martingale, right? So it seems to be using a fairly interesting martingale-based strategy, but we'll have to actually go and run a backtest in order to see how the strategy works. So now I'm going to just quickly switch over to the MT5. Okay, so here you can see that we're in the MT5 terminal. I've already taken the liberty of downloading the demo version of the Quantum Emperor from the marketplace. And as you can see here, I have the backtest window open. Quickly to go through the inputs tab, you can see that you're able to adjust the risk preferences. This will simply act as a lot size filter or a lot size calculator. I've set it to extreme for this particular example, but maybe we can also set it for medium when we run the backtest. But the chart you'll see in a second was run on the extreme method, effectively just to stress test it, so please keep it in mind. In terms of the actual strategy it's running, what I alluded to in the first part of this video, even if something runs a grid-based martingale, it needs to have a reason to actually enter a trade. Because if you're entering in a completely random way, your odds of hitting a longer string of losers and blowing your account is quite high. So the coin toss plus grid is usually a pretty horrible idea. So generally speaking, you will see with the more sophisticated expert advisors, even those based on a martingale system, there's usually an underlying strategy behind them, because this reduces your odds of having a blown account or a long string of losers. Their strategy here appears to be a degree of a range breakout. So with box hour start, box hour end, that typically means that there's some degree of range breakout system, which is typically as simple as you put a box around a time period, and if price goes either above or below said box, you would buy or sell. But I'm not so sure if it goes that much in detail. We'll see when we run the actual backtest visual one, that is. And here we can see there's a few filters, but it appears relatively opaque in terms of its logic and reasoning process. So please keep that in mind. Here in terms of the graph, this was the backtest run on extreme settings. So this was every tick based on real ticks, 8 cap, 100% history quality, and you can see that it turned 100 grand into what is that, like close to 68,000? That's yeah, it made $56,000 or close to 57 profit. Therefore, that is a rather impressive performance. But as you can see here, the drawdowns were relatively significant. Moreover, there's nothing stopping the vendor from having also run this exact same backtest, right? So it's quite plausible, I'm not saying he did this, but many vendors would perhaps overfit their system so that it doesn't blow during a reasonable amount of years, right? However, if you were to do a Monte Carlo simulation, if any of these go just a little bit lower, there's 1 or 2 more runs in the system, who knows what would have happened. So something else to keep in mind. So let's just run a visual backtest now in order to see how this actually works when we run. Okay, so I will now just run a quick visual backtest so we can get a better idea of how the strategy is running. So this would be an example of the system running on the H1 time frame, and then I'm able to move over here to the daily. So as you can see, it is trading frequently, and it is using a grid-based system. As you can see, if price goes in its direction, it closes the trade rapidly. Let me perhaps pause this. Let me find a good grid. Here we go. So if price, for instance, were to go in its direction, like, oh, these are perfect example, it would rapidly close the trade. However, if you get to the point where price does not go in its direction, it starts to go against it. So if you see my screen right now, you were trying to go short, but price kept going up. So what it will do in that scenario, as the further you get away from the initial positions, it will start to sell more. So short, 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 and then when price finally moves against the last trades, it will then close the position. But the issue with that is, let's say price kept going. It would just keep opening trades, one after the other, and you might very well run out of money. So the issue with martingale is it only works if you have an unlimited bankroll. And don't know about you guys, but unfortunately, I don't have an unlimited bankroll. Something to keep in mind. So if you were familiar with martingale systems, I don't think I'm saying anything which is surprising here. But what should we take away from this? Is the quantum emperor EA useless? Should you consider it? And my personal take on it is I likely wouldn't put my own money into the EA as it is here. However, for very specific use cases, a modified version of this could perhaps be useful. So let's say a prop firm where it isn't really your money, you were trading simulated money or demo money, perhaps a higher risk system which usually makes money but might blow every 2 years. That doesn't really matter because your risk is capped at how much you paid for the account. Therefore, kind of to sum up this video, this is an incredibly high risk system. It's also being sold in a fairly opaque way where you don't really understand the underlying strategy behind it. Even looking at this backtest, we see no indicators, we see no boxes. It appears to be buying and selling. However, we don't know if the actual underlying system has any edge or if it's purely just a bad money management technique based on martingale. So ultimately the takeaway is this particular EA, likely not the best martingale system. If you want to do martingale, there are better ones out there. Responsible Forex Trading, Ryan, he has some pretty interesting systems. Personally, at Prosperity Algo Solutions, we don't sell any martingale-based systems. All of our systems are scalpers, as they're simply significantly safer. And I don't like selling something that has the risk of ruin. But the key takeaway is you can still perhaps use this to learn more about martingale and perhaps explore modified systems which are in some ways similar to this to trade very specific risk use cases where your risk is ultimately capped. So thank you very much, and please leave me a comment if you want me to go in more detail on a particular